like Legal Shield Associates. So what you're about to hear from the guru of home business tax law, Dr. Ron Mueller, will save all of us. Will save you thousands of dollars in taxes every year, year after year, just from this one tax deduction alone. So Ron's been a member and user of Legal Shield services for nearly 15 years. So not only does he, understand and appreciate what we do, but he's helping all of us save money and have that much better of an opportunity to build our amazing businesses and recruit others to do the same. So to all of my good friends at Legal Shield, Mr. Ron Mueller. Ron, great to have you, sir. All right, hold on. Ron? Ron, you on mute out there? Bob, can you hear me, or Brendan, Jerry?
Yeah, I can hear you, and Ron Fline's unmuted.
I'm glad you can hear me. I thought that was a pretty good introduction right there.
It was a really good introduction.
We'll find him. Hold on, folks. We'll find the good doctor.
Single biggest tax deduction ever approved by Congress for us, for home business owners like us. So as Stephen Covey would say, let's begin with the end in mind. And here's where we're headed with this presentation. We're going to cover how much you're really paying in healthcare expenses. That's our category for today. How much can most people deduct? How much can you deduct? And then finally, how you can now save about $5,000 in taxes every year, and that can start retroactively. And that's because of the healthcare deductions that are available to people like Legal Shield Associates. This may be a shock to some people. It may be not a shock to other people. But last year, single people paid an average of a little over $16,000 on their health care expenses. And a family of four spent more than almost $38,000. That's a big number. But here's the deal. How much of it can we write off? Well, if you don't have a home-based business of any kind, you get pretty much nothing. You almost no write-off whatsoever unless you're able to have some of your premiums withheld before taxes from your job. And if you do have a home-based business, people, including you, can always write off their insurance premiums. That part can always be written off. See, that's right here on page 1 of your 1040, your main tax form. See line 29 there, it says self-employed health insurance deduction. If you're not self-employed, you don't get to use that line. If you are self-employed, you get to use that, but only for your premiums. And there even sometimes are caps on the premiums. So that's a problem because that's only the premiums. What about the rest of those expenses? If you take out the insurance premiums and add up the rest of them, a single person still is saddled with more than $10,000 in health expenses, and a family of four, almost $22,000. That's a lot of money. So how much of that can we write off? Well, you could write off some of it, but there are two big obstacles to doing that. Now, we're talking now about people like us, people with a home-based business. Here are the obstacles. The first one is you've got to itemize your tax deductions. You can't take the standard $6,200 deduction for individuals or $12,004 for married. You can't use the standard deduction because the only place on any of the tax forms to write off healthcare expenses other than premiums is on Schedule A, the Schedule of Itemized Deductions. Well, one of the benefits of being in a home-based business is you can put a lot of your expenses onto Schedule C, your business tax return. And so it's usually better off, you usually come out further ahead financially by taking a standard deduction. But you can't use the standard deduction if you want to claim any of those $10,000 to $20,000 worth of health care expenses. That's just the first obstacle. The second one is a killer. It's a 10% threshold, it's called. Here's how it works. Let's say you have a household income of $80,000. That 10% threshold, 10% of $80,000 is $8,000. That means your first $8,000 of out-of-pocket medical expenses still aren't deductible. Even if you file a Schedule A, you're still going to lose $8,000 worth of deductions. Well, how big a deal is that? It's a big deal. But losing $8,000 in deductions is the same as losing $2,000 in refunds. So this 10% threshold is costing you $2,000 in cash money, even if you have a home-based business, and even if you file a Schedule A, itemize your deductions. Well, there's a game changer now, and that's what we want to talk about today. This game changer actually came in the Affordable Care Act. the tax law I'm going to talk about has been in place longer than this, but the Affordable Care Act is what said that it's going to apply specifically to a specific category of small business owners. That category is a business owner who has one employee or no employees. So it's only for those people, because anybody with 2 or more employees has to have group insurance now under Obamacare. So this category applies to businesses with 1 employee or no employees, and this tax deduction is huge. It's only for 1 employee or no employees, but that's most Legal Shield associates, right? Because most people who have a home-based business have no employees or just 1 employee. Now, this deduction is now it's authorized in Federal Tax Code 105. So if this sounds new to you and if this deduction sounds so big you say it's not believable, tell your tax pro that it's in Code 105. They'll know exactly what you're talking about. Code 105 used to apply to a lot more people, but now it's specifically to home business owners with 1 employee or none. So what exactly is authorized in this tax code? It's called a health reimbursement arrangement or health care reimbursement arrangement. It's a complicated set of words. It really means you get to write off your health expenses. It's a health reimbursement arrangement. So what is that? What's it do for you, and how can you reap the benefits from it? Well, let's come back to what it is in just a minute. It'll be easier to explain what it is after we've covered question number 2, which is what will it do for you? Well, it allows those who qualify, and you already know what it takes to qualify now. You've got to be in a home-based business and have no employees or 1. It allows those who qualify to deduct 100% of all health-related expenses. So there is no 10% threshold. You get to keep that $2,000 cash in your pocket. You do not lose that $8,000 worth of deductions. You can deduct all 100% of health-related expenses, but it gets better. It's for the business owner, that's you, but it also covers all other members of your immediate family. So what we're now saying is that all health care expenses incurred by you and every member of your family, your spouse if you're married, your kids if you have dependents, are all tax deductible now. 100% that's tax deductible. So those numbers we looked at before, where a family of 4 was paying something like $27,000 in health expenses, that's all deductible under this Section 105 now. So let's put that all together, those words all together. It allows those who qualify to deduct 100% of all health-related expenses without any 10% threshold, with no exceptions. And actually, you can even put the insurance premium on your Schedule C, which gives you a better tax deduction. You don't need to claim it on their 1040. As for you and all members of your family. Now, how does it work? We still leave 2 questions. We answered what it does for you, but what is it? And how can it work for you? Here's what it is. It's an employee benefit. It's just like vacation time or sick leave or 401k matching or something like that. When you go to work at a W-2 job, your first day they give you an employee benefits manual. And they let you bring it home and you're supposed to read it over. Then eventually you got to come back and go back to HR and you sign a piece of paper saying, I understand it, or you get your questions answered, and then you say, I understand it, my questions have been answered. Well, it's an employee benefit just like that. But this employee benefit is a bit different. This employee benefit allows the employee to be reimbursed by the employer for all health-related costs incurred by that employee and members of that employee's family. Let that soak in. So you got to have an employee. So how does it work for you? Well, you need an employee first. So because it's an employee benefit plan, you need an employee. So that's why I say it's good for people with 1 employee or none. None actually technically does not apply. But if you've got none, you can hire one, right? If you got 2, I suppose you can fire one. But if you don't have one, you can hire one. If you've got one, you're set, as long as that one is your spouse. So there's 3 ways you can get an employee, 3 easy ways. One is the easiest, if you're married and this works for you, is to hire your spouse as your only employee. Now, your spouse doesn't need to work a lot of hours. A few hours a week is enough. They work as a part-time employee to your business. And that's the easiest one, because then the spouse becomes the employee, so the spouse gets this benefit. The spouse gets to write off all of his or her health-related expenses and the expenses of the rest of the members of his or her family, which includes you. So that's how you're covered. Well, if you don't have a spouse, or it doesn't work for you because your spouse is perhaps not available to work in your business, then you have 2 other options that are fairly easy. One is you can form a C corporation. Now, you own the C corp. It's your corporation, but the C corporation becomes a separate legal person, is the way the lawyers talk. It's a separate person. So now because your C corporation is a separate person, it can hire you as its own employee. You have to be schizophrenic to understand this. You're two people. You're your corporation, you're you. So Ron Mueller forms Ron Mueller Corp. Ron Mueller Corp hires Ron Mueller as its own employee, and then Ron Mueller Corp gives Ron Mueller, the employee, this employee benefit plan. And it still extends to all members of my immediate family. So if I'm married but my spouse wasn't available to work for me, it would still cover her. If I have any kids, it would still cover them. Your third option is very similar to this one, and it's form an LLC, but have it taxed as a C corporation. When you form an LLC, you tell the IRS, you file an election form, you tell them how you elect to be taxed. As an LLC, you can be taxed as a sole proprietor, or as a C Corp, or as an S Corp, or as a partnership. You tell them how to do it. This will not work for S Corps. It will not work for S corporations because that's a pass-through entity, so all the reimbursements that you give your employee are going to end up being taxable income to your family. So it works with hiring your spouse as a sole proprietor, or forming a C Corp and having it hire you, or forming an LLC that's taxed as a C Corp. Now, both of those are pretty easy, and if you want to do any of those things, I found a lawyer who I've been working with that his business is setting up business entities, and I've worked out some very special pricing for anybody that I refer to him. So if you need a C Corp or an LLC, contact me. We'll talk about that at the end of this call. John will give you my email address or phone number, and I'll help you get one set up. So those are options for setting up an employee. So what is the health reimbursement arrangement? What is it exactly? As I said, it's an employee benefit, but physically it's a formal written and signed legal document. So all benefit plans are legal documents. That's why when you get hired by a W-2 by an employer and you become a W-2 employee, they give you a health benefits plan. It's a document you take home to read. So this is a document also. It's a part of in your case, it may be your only employee benefit. So the entire document could be this. But it's a formal written and signed legal document that says, essentially it says, as long as you're employed by me, I'll reimburse you as a tax-free fringe benefit. Those are key words for all out-of-pocket expenses. This is how you write off all of your expenses without any exception and pay no taxes on your health care costs. It's reimbursed as a tax-free fringe benefit. So when you, the employer, reimburse the employee, maybe it's your spouse, for health expenses incurred by a member of your family, the money you pay your employee, that reimbursement, is tax deductible to you as a business expense. But the money you pay your spouse is not includable as taxable income for the spouse. It's a tax-free fringe benefit. This is huge. So what have you just done? With this health reimbursement arrangement, you just converted a very marginally deductible personal expense, one where you get, at best, maybe right off your premiums. And if you go through the trouble of filing a Schedule A and itemize your deductions, you might get another couple of $1,000s worth of deductions, but it's very marginal. But you converted that deduction into a 100% tax deductible business expense under Section 105 as authorized in the Affordable Health Care Act. That produces two major benefits for you. One is, as I just described, all your health costs are now safely deductible. They're deductible as business expenses, and they go on your Schedule C if you're a sole proprietor or an LLC. But it also reduces the profit margin on your business. So that means you pay less, your business pays less taxes. That's why you might want to move your insurance premium deduction from the 1040 where you could deduct it and include that in your health reimbursement arrangement, because that way it brings down your, you still get it tax-free, you still get the tax deduction, but it brings down the profit of your business, you pay less taxes. It could even potentially put your business from time to time into a net operating loss position, in which case that has longer-term benefits for you. So this is major. It does two major things, this one tax deduction. It makes all of your health costs for your whole family deductible, and it reduces the profit that you pay taxes on with your business. Let's look at what's deductible. Most people understand that it's health insurance premiums, obviously, is deductible. And you probably know annual deductibles. Annual deductibles alone are now running well in excess of $1,000. For some people, they have a high deductible plan, and they may pay $3,000, $4,000, $5,000. Annual deductible is that's the money you have to pay for health insurance for health coverage, health expenses. before your insurance coverage actually even kicks in. So that's a big one. Then you got your co-pays and co-insurance. Most of us understand that. But then there are non-insured health expenses. What are the things that aren't covered under your health insurance plan? There are a lot of them. Here are a few examples. These all can be covered under your health insurance, health reimbursement arrangement, but almost none of them are covered under your health insurance plan. Pre-existing conditions now are covered under your health insurance plan under Obamacare, so they're covered by law. How about elective procedures, though? If you elect to do something, it's not a medical necessity, then most of health insurance companies won't cover it, but this will. Vision care, glasses, contacts, even LASIK surgery is a good example of an elective procedure. That can run $2,000 to $3,000, and that's not covered by hardly any medical plans. But it can be written off as a tax-deductible expense under your health reimbursement arrangement. All dental expenses, even cosmetic things like cheap teeth whitening and overlays. Chiropractic it used to be covered under health insurance, now often is not. Orthodontics. If you got a kid that needs braces, you're talking about $6,000 to $8,000 to $10,000 from start to finish per child. That is generally not deductible anymore under most health insurance plans, but it can be under the umbrella of the healthcare reimbursement arrangement. Then you got other healthcare expenses like acupuncture. Can you believe this? Acupuncture is listed by the IRS as one of the covered expenses for an HRA. Massage therapy even, childbirth delivery, sterilization, metabolism testing. Here's some more from the IRS. Here's some categories from them. Medical services, dental, supplies and equipment, lab tests, medical treatments in hospitals. Check out some of these therapists. Often your coverage does not cover a therapist. Or chiropractor, we mentioned that. Electrolysis, breast reduction or enhancement. I mean, all those kind of things can be covered. So this goes way beyond what you normally think of when you have the blinders on of health expenses, because we tend to think of health expenses as being those that are covered by our insurance plan. But some of our biggest expenses are ones that aren't even covered anyway by our insurance plan. So nobody's going to reimburse us for them until now. That's just a handful of examples. The IRS actually has a document I'm going to tell you about in just a minute. The IRS actually has a document that lists 2 pages worth of these kinds of fine print of all the things that are covered. Very few exclusions. So now you see why I called this tax deduction huge. Almost any self-employed person now can slash taxes by at least $2,000, and usually around $5,000 or more. In fact, we've done some surveys that have shown that $5,500 is approximately the average refund for people who are using the HRA plan. That's in addition to any other refunds you might be getting. That's in addition to being able to write off your insurance premium. So I got to ask, are you in? I mean, I can't imagine that if you don't jump in and take advantage of this, then you can be. I can guarantee you're going to overpay your taxes by a minimum of $2,000. Now, let me tell you something. If you're somebody sitting out there saying, "Well, my employer pays for my health insurance," I'm an old guy and I got Medicare. I'm also Navy retired, so I got TRICARE. Those are non-deductible plans and they're non-copay plans. And yet I have the health reimbursement arrangement, and I got back about $2,000 in deductions in refunds last year because of this plan. Because it covers expenses that go so far outside of what's traditionally covered under health insurance. So there's nobody watching this video who wants to knowingly overpay Uncle Sam more than $2,000. So I encourage you to stay with me a little bit longer. Here's an interesting chart. You think costs are going to go down? Probably not. It's a pretty consistent trend from 2002 up through last year. It's going to keep going up more and more. So if this is a valuable plan now, it'll become even more valuable as we move forward. So how do you cash in on this tax savings bonanza? Again, it's only available for one-employee businesses. So if you've already got 2 or more employees and you can't be a one-employee business, then this won't apply to you. But you want to know about it because this would be a great little additional recruiting tool to tell people that they can qualify for this bonanza, I call it, of tax savings by joining prepaid legal. I still go back to prepaid legal. I've been around for so long with this business. Do Legal Shield and join you in your business. So here, the devil's in the details, though. We've all heard that saying, right? That means you've got to pay attention to the details, and the IRS has a lot of details on this one. In order to implement this plan, there are a lot of details both in setting up the HRA properly. Then there's a whole list of details and steps you need to take to stay compliant while you're implementing it. These are the 10 requirements just for hiring the employee. Now, this is not mind-boggling. You can go through it. Verification of employee eligibility. You you print out Form I-9, IRS Form I-9 from irs.gov, and you have your employees filled out. You throw it in a file. That's good. You can do all these things. It's just going through them one at a time and making sure you don't skip any steps. But then that's just to get the employee hired properly, so that your spouse or yourself as an employee of a C Corp or an LLC, to ensure that you have a legitimate, a bona fide employer-employee relationship. Then once you set it up, here are the 15 requirements for implementing it correctly. Again, you can do all these things. It's just going through a checkoff list. And I'm going to give you this checkoff list. I'll tell you where to get it. And those are the requirements for setting up and doing it right. You don't want to skip any steps, because if you do, then you could potentially lose this benefit, the value of this benefit, if later you're ever audited. Now, most audits come about because of random selection by a computer. So you never know. You can't control random selection. So you never know when you're going to be audited. You can have absolutely perfect tax returns, but still be audited. Well, you don't need to worry about that if you follow all 15 of these steps, but you got to follow all 15 of them. Now, here's why this is a challenge. Last month, research was done of entrepreneurs across America, and they asked them, what are the things you love the most and hate the most about being self-employed? 68% of them reported what they hate the most about being self-employed is paperwork and administration. I mean, none of us get into legal shield because we want to do paperwork and manage complicated tax deductions, right? We get in because we like helping people, and we like adding some money to our income and becoming financially free. So most entrepreneurs report they hate paperwork administration, but not everybody. If you're a bring-it-on person, okay, here's what you can do, and you can do this for yourself, and you can do it at the beginning immediately after this call. Get Publication 502. You get it from irs.gov. Just go to irs.gov, and in the search box, type in Publication 502. That will give you an IRS publication, a PDF document, rather lengthy document, that tells you all these steps, how to set up a health reimbursement arrangement, who qualifies for it, the administration steps to go through, and et cetera. It's going to take a little time, a little focus, in fact, a fair amount of time and focus, but the ROI is going to return, the investment gets returned to you is $2,000 to $5,000. So how much is your time worth? You know, if you've got some time, then you can come out $2,000 to $5,000 ahead with no expenses to yourself except loss of your time. And of course, you need to take your focus off your business. But that's all doable. There are a lot of people who just want to do it themselves. So if you're bringing on a person, you go for it. But if I don't have a time person like me, stay with me for 5 more minutes, and I'll show you a miracle. Seriously. Here's the deal. It's hard to ignore a tax deduction this big. I know that none of us like administration and paperwork, but this is worth $5 grand for most people, minimum of $2,000, bare minimum. This is dollars now, not deduction. These are dollars in your pocket. So it's hard to ignore this big deduction. But I can hear a lot of you saying, I still don't like administration, though. Okay, so I'm not going to say stop whining about it. We're going to have a solution for it. It's a dilemma. On one hand, if you and I are going to have a successful business, what do we need to do? Stay focused on the business of our business, right? Now, this would be a distraction from our business. It's an important one, but if we don't do this plan, if we skip over it, it's like not pursuing this deduction is exactly like giving up $5,000 or a bottom line profit. So if you want to wait till the end of the year and see how much profit your business made and then throw away $5,000, that's the same thing as not having this plan. That's what it's worth. So that's a dilemma. What do you do? Which one do you do? Well, I didn't like either deduction. And I'm an optimist. And I always come from the point of view that when it looks like there's an either-or decision to be made, there's almost always a third option. So I don't rest easily when I hear either-or. I have to either do the work myself or miss the deduction. So here's what I did. I actually found an employee benefits management company that does every HRA plan setup and administration for me. I didn't even know there was such a thing as an employee benefits management company. I never heard of that. But I started doing some research to try to find out what's another option besides me to the plan of being responsible for carrying the 15 correctly all year long. I found one that's been in business for 40 years.
Hey, Ron, you're breaking up. We're getting every third word right now.
Oh, okay. I don't know why that is. I don't know what to. Okay, I'll try to keep the phone closer by and Is this helping better? Is this better?
Yeah, you're good now. No problem.
Okay, good. Thank you. Okay, so I found this employee benefits management company. They did the work for me, but here's the best part. In the end, it cost me nothing. I'm going to come back and talk about that to you in a second. It cost me nothing out of pocket, and they do all the work for me. So here's what happened. I solved that dilemma. You don't have to lose out on the biggest deduction Congress ever gave us. Just because the IRS decided they're going to make it complicated, we don't need to miss out on it, and we also don't need to distract ourselves from our primary business. So remember this slide I had a minute ago? I said, in the end, it costs you nothing. Let me explain that. But first, I want to say one other thing, and that is that here's the package that I got, and it's available to you too. Here's what they do for me, the package of services. The company handles all 27 steps, the 10 steps for setting up an employee and the 15 steps or the 17 steps for managing the plan correctly. They handle all that stuff for me for a full tax year. At the end of the year, I can print out a detailed report that fully documents my deductions. So that's a report I can give to my tax preparer. So if they've got the documentation to claim this massive deduction, and if I'm ever audited, I've got all the documentation right there in that report because they've done all the record keeping for me. And they got record keeping compliance officers that do this regularly. I mean, full time. Now, here's something I found very important to me, because I wasn't sure how good this company is going to be when I first started working with them. I've now vetted them. I've been working with them for over a year, and that's why I'm recommending them to you now. But one of the guarantees they gave me, and they will give you if you want to use them, is if I'm ever audited, and that audit calls into question my HRA plan, there's something that most people don't know you can do, but I can, in the middle of an audit, if they bring up the HRA plan, I can hold up my hand and say, wait a minute, time out. This audit is suspended. I'm going to be represented on this issue by counsel. And they're forced to say, okay, they're forced to let you do that. You call the benefit management company. They'll send in an attorney who specializes in this area, and they'll represent you on this portion of the plan for you. You don't need to defend your records or your plan or anything. They'll do it for you. They've been in business for 40 years. This plan's been around a long time, although it just now that it applies to only the micro sector of business with one employee. But all this time, they've never lost a tax court case. So this is buttoned up. If their work wasn't buttoned up, they wouldn't be able to say they never lost a case, and they wouldn't be offering free audit assistance if they knew this was going to be a cause of an audit. But here's the best part. How does it end up costing me nothing? Here's the last part. At the end of the year, the company that I'm working with, I'll tell you about in just a minute. The company I'm working with, if they've not, here's their promise, their second guarantee. If they're not able to document a minimum of $2,000 worth of deductions, health care deductions for me, they'll refund 100% of my annual plan administration fee. Well, what's that? Well, $2,000 in deductions will produce about $600 in tax refunds. My plan administration fee is $395 for the entire year. So since $395 is less than $600, in the end it costs me nothing. The worst that can happen is I get my money back. That's the worst that can happen. If they can only document a mere $2,000, which is the bare minimum, I'm still going to come out over $100 ahead. So it ends up costing me nothing in the end. Again, the worst that can happen is I get my money back. So who's the company? Let me tell you about the company, and I'm not, I am actually endorsing them, but you've got some other options. You don't need to do this. The company is called TASK. It's Total Administrative Services Corp. Again, I say they're based in Madison, Wisconsin. They've got thousands of employees. They've been doing this for 40 years. They're managing all kinds of employee benefit plans for as an outside management company. They're currently managing over 28,000 HRA plans. And all the new ones, of course, are only for one employee. Some of the older ones had more than one employee. And again, they've never lost a case. So you can learn more about it by going to deducthealthcost.com. I'll give you that web address again in just a minute. But let's go to why do I use TASK to set up and administer my own HRA? I want to tell you about this, and then we're going to bring this to a close. This is a page from that website I gave you, the deducthealthcost.com. This is why I use them. They produce a customized HRA plan for me. It's written for me. It's not a boilerplate, fill in the blank, a customized plan for me. Then they create a customized employment agreement to make sure that all those 10 steps have been followed. They handle the reimbursements for me. So I don't need to bother to, when my employee submits a health expense claim, I don't need to do the reimbursement. They'll take care of that for me. They keep all the documentation, bulletproof documentation. They got people in Washington that track government changes constantly, so I'm always in compliance. They have live customer service. Can you believe that? When you call the phone, somebody actually answers. It's not a phone tree. They give me that detailed year-end review, the document I can print out to justify my deductions. And finally, they give me the audit protection guarantee and the refund guarantee. So that's all the stuff they do for me. That's why I use them. Now, so now what? Okay, here's what you do next. You can use Task, as I do. I'm going to tell you how to get all of them in just a minute. You can use somebody else. They're not the only benefits reimbursement plan in the country. Or you could hire an individual to do this as long as they pay attention to the details. You can do it yourself by getting that IRS document, that publication 502. Just do something, because this deduction is too big to just ignore. Ignoring this deduction is throwing away a minimum of $2,000 and probably $5,000. That's in cash for the average legal associates member. Now, this is the biggest tax deduction ever approved by Congress for small business owners. So you don't want to miss out on this one. The cost of doing nothing. Here's the cost of doing nothing. For an individual, it's at least $16,000 because they can still write, as long as they have a home-based business, they can still write off their premiums. But they're going to lose $16,000 worth of deductions otherwise. For a family of 4, they're going to lose $37,000 in deductions. So you don't want to do nothing. You want to do something. But here's something very important, though. Why should you take action now? The reason I was so glad that John and Darcy let me do this presentation now is because the law allows an HRA plan to be set up backdated to the beginning of the calendar quarter in which it's created. Well, the beginning of a current calendar quarter was July 1st. So if you get this plan before the end of this month, while we're still in the third quarter, your plan can be dated July 1st, which means you can get a tax write-off. You can get the deductions for all health-related expenses that you've incurred for the last 2.5 months. If you wait for another week and a half to do this plan, then your effective date could be October 1st. So the sooner you do this, the better. There really is a sense of urgency about it. Especially if you had a large expense amount during the past 2 to 3 months. If you did and you want to deduct all those, you still can, because it can be retroactive to the 1st of July. So if you're interested, here's where you can get more information. DeductHealthCost.com is the web page that I showed you a piece of. That will summarize all the things that I've just covered on this webinar. The enrollment fee is $395. That is 100% refundable even if you change your mind. So if you're not sure if you want this, you think so, you're going to talk to, within the next 2 to 3 business days, somebody from Task will call you, and they'll have somebody do an interview with you to see whether this is appropriate for you. And if they decide, or you decide, this isn't appropriate, or you just change your mind, or you're cold feet, we refund 100% of your money immediately. So there's no risk. And then if you do go with them, by the end of the year, if they can't document $2,000 in health deductions, you get your money back. So it's easy. But you may have a question first. If you got a question about how the program works, then I can't answer those because I'm not Task, and I don't work for them. I'm not their sales rep. I'm just telling you about an experience that I had that gave me a positive result on a dramatically big deduction. But this is a number that you can write down, 855-591-0562. That's a rotating number. It goes to a member of Task's help, not their helpline, their customer service. And their job is, they're not salespeople. They're not going to try to sell you on getting their service. So they don't need another $395. They can. By the way, the reason they can do it for such little money is because they're doing it for 26,000 people. If they were doing this for a handful of people, it'd be way higher than that. You can imagine all the work they're going through. But they've set up systems. We know systems work, right? John and Darcy teach you systems all the time, and systems work. Well, they got a system that will work for you. Now, if you're waiting for a sales pitch, I don't have one. This is my last slide. I just want to tell you where to get what I've got if you want it. If you don't, there are other plans. Just Google employee benefit management companies, and you'll find other companies that you can talk to. This is one that I can speak for because I've been a customer of theirs for a year, even before the Obamacare changes were made. So, John, Darcy, thanks for having me on this call. We can do questions. I'd be delighted to take any questions.
Let me make. Okay,
I have a
gotta make
question,
sure I'm
John,
on.
when you're ready.
Yeah, great, Ron. Great stuff. I'm just sitting here with a whole 2 pages of just notes in a host of different areas here, and you know, who wants to pay Uncle Sam more than they owe? That's just that's a slam dunk right there. I don't think anybody does. So again, I like the fact of how you broke it down. I like the fact of really how you explained it, and you know, I think this organization, you know, deducthealthcosts.com. The majority of us as entrepreneurs, we want to keep the main thing the main thing. We want to stay focused on where we're most productive. And you know, I'm not that productive at filling out forms, and yet at the same time, I don't want to pay 1 penny more to, you know, the IRS or the government than I have to. And we all know, for the most part, that everybody's overpaying because people don't take just a little bit of time. So, you know, what a great organization that you referred there. Let me run over to just a couple of our Millionaire Club members for any comments that they might have. And as we do that, if anybody has a question, a comment, just an aha moment, raise your hand. We'd love to hear from you, and we'll take just a few more minutes before we wrap it up. So, Brenda, Jerry, Bob, any thoughts, comments from you guys?
Yeah, I have one, John. This is Jerry.
Yeah, Jerry, great to have you.
Listen, hey, Ron, this is phenomenal, and I can tell you, I have your last book. It's not what you earn; it's what you keep that counts, and it's my home business Bible. I have a question for you. I have an IBM retirement that includes an HRA. How's that going to affect my ability to use this, or my wife's ability? We're both on the associate agreement.
I don't think they have an HRA. It may be an FS. It may be a health savings account. If you have
Maybe you're right. It's an HSA. I'll bet that's right. Well, I get reimbursed for premiums up to a certain amount. That's
right,
what it is.
That's all you get is a reimbursement for premiums that you spend after tax, or it can in some cases it can allow you to have your premiums paid with before tax dollars, and that way you don't have to wait and claim it on your 1040. But it doesn't cover any of these other expenses. It only
right. You're exactly right. So I can do this independent of that.
Yes.
Oh, excellent, excellent. Thanks a bunch. This is great.
Welcome. Thanks, Jerry.
Good questions, good questions. Bob Cohen, thoughts, comments? I know that you guys have hosted Ron a whole host of times on different calls over the years. And Bob, any thoughts or comments from you?
Oh, sure, absolutely. You know, Ron, thank you so much again for sharing and pouring into us. You've done this now for years, and, you know, all of your materials, your tools, what I really find helpful is that, again, we're keeping the main thing, but now these are really good extra add-ons that when we're out there sharing the service with folks, sharing the home-based business with folks, again, this is another kind of quilt that we can then share with folks about the tax savings that are available. And, you know, information is knowledge, and knowledge is information. And if we're not, you know, sharing this with folks, they just don't know. And so that's what I really appreciate that, again, you keep letting us know about these little, you know, you live and breathe this stuff, which is awesome. And, again, that we can now take it into the marketplace and share with people. So thanks for everything you do. And Ron, can you share your website with folks? Would you mind? Because I know there's just so much good stuff on your site.
Sure, absolutely. In fact, this website that's on your screen, deducthealthcosts.com, that actually leads to a hidden page on my website that has this information on it. So when you go to this is a shorter version. Then you can just click on Home, and it takes you on my main web page. But the main web page, if you want to write this, that's a long one. It's homebusinesstaxsavings.com. homebusinesstaxsavings.com. But for today, you can get there, or through for the next week or so, you can get there through deducthealthcosts.com also. And Bob,
okay,
you mentioned knowledge. You mentioned knowledge is power. I love that saying, but I love the corollary to that. My corollary to that is lack of knowledge is expensive. That's when it comes to, if you have lack of knowledge about the tax deductions available to you, it can cost you a lot of money.
Absolutely.
Thank you, Bob.
Anybody, let's see, let me real quick, I saw Mr. Aaron Gonzalez. And Aaron, I know you had your hand up. Did you have a comment or question? Aaron Gonzalez. All right.
I'm sorry, Mr. Hoffman. I'm here. I had to come off of mute.
Okay.
Can you hear me? Am I on? Okay, good.
You bet.
Fabulous, fabulous, fabulous. All I got to say, and I, as you guys know, I'm coming up from the rear, and I model success. And the tax advantages is 15 years ago, 14 years ago, actually, when we came into the business. Our lead-in was, how would you like a pay raise at your job so that you can leverage some tax advantages by having a home-based business? When people would say, well, how can I do that? And we would say, when you have a home-based business, you can leverage a lot of tax advantages because you're a traditional business. You just do it from home. And this is just, more of that that we can use to existing business owners to get their business. So there's a lot of people that already have small businesses, and this is a prime market that I'm really excited about digging back into. A lot of small business owners, the mom and pop shops, they don't even know this stuff. There's people been in business for 10, 15, 20 years, don't know this stuff because the government never sends them the memo. No one sends the information on how you can save money on taxes because they want your tax dollars. So we have to make that part of our job as their legal service provider to say, hey, don't trust me, you don't know me, but here's a multi-million-dollar legal system that has tax attorneys that you can ask to verify if what I'm saying is true. And if what I'm not saying is true, cancel the program. So you're guaranteed to get a sale. You can help them to use the membership because they'll call to ask the tax attorney to verify the information, and then they can go ahead and save some money on the taxes. Me and Mr. Watson built our entire business years ago on that, and this information is going to help us do it again. Thank you for having him on the call, Mr. Hoffman, and I can't wait to go back and revisit this webinar. Back to you, sir.
Yeah, great. And, what a great opportunity for us to reference other entrepreneurs and, and help in respect to what, information Ron shared. So think about this, whether it's $249 for the business opportunity, $149 for the business opportunity, or right now $99 for Legal Shield. Just real quick, think about this. We position ourselves, number one, in the fastest growing economic segment of our economy. That's called the home-based business segment. Number two, the ability to, profit from the services we offer by positioning ourselves as a junior associate. Number three, access to the tools, the resources, the systems, the intellectual property of, one of the strongest organizations ever in the direct selling industry to build our business. Number four, we own our book of business, the ability with that one-time investment to own our book of business. And now if you want to add, which you absolutely should, the fifth benefit, the ability to position ourselves with an advantage to leverage our benefits for maximum tax savings. So we might find a way to make that a little simpler to share, but, when you listen to Ron from having him in Orlando to what we have today, somebody might not be that excited maybe about, the business op. Maybe they're just sitting on the fence, but my goodness, to be able to take advantage of this type of an opportunity and maximize, what the IRS makes available to home-based business owners like us, $2,000 to $5,000, that'd be like saying, okay, well, I'll give you $10 and you'll give me $1,000 back. I got to think about it. I'm not sure, about that. Are you crazy? Here's 10, you're going to give me 1,000, and that's basically what the IRS has said here. So just good stuff, Ron. Good stuff across the board. Let me just see. Here we go, real quick. We got Laura Levitt. Let's go out to Laura Levitt. Laura, good morning. Fire away, dear.
Can you hear me?
Yep, we sure can. Laura, go ahead.
Can you hear me now?
Yeah, we can hear you.
Okay, I'm sorry. Okay, Question, I used to do taxes, and I don't say that to brag. It was a long time ago, and there's always a lot of changes. And my understanding is that with a C Corp, the only way you can really get money out of a C Corp is by paying yourself on a payroll check on which you have to pay payroll taxes, which are hefty, as we know. And an S Corp is sometimes better so that you can minimize some of those payroll taxes and just take some of the income as a pass-through. So how do you determine when it makes sense? Plus, in California, you have to pay $800 a year to be an LLC or a C Corp. So how does a person determine when it's really beneficial to make this switch?
The answer is you estimate the benefits. So you want to determine what all of your health care expenses have been for the past year, or forecast what they'll be for this year. And then take that number times whatever your tax bracket is. So let's say you're going to spend $25,000 on health care for your family, and you're in a 25% tax bracket, then or 20% tax bracket. And that means your benefit would be worth $5,000 in refunds. So are you losing more than $5,000 in payroll taxes? It doesn't work with this won't work with an S Corp. So you if you want to do a C Corp, then you've got to say, am I going to get more benefits out of it than the cost? So you and I've actually got I mentioned I've got somebody I work with that does the business entity setups, and if you send me an email, I'll introduce you to him, and he'll give you a free consultation. And what I love about this guy, his name is Scott Burnett. What I love about him is that he won't try to talk you into forming a business entity just because that's what he sells. There's an old saying that if your only tool is a hammer, then solution to every problem is a nail. Well, his only tool is just setting up business entities, but he's got enough business, he won't try to talk somebody who doesn't need one into getting one. So if you want to get somebody who will help you do that, I'll be glad to help you do that.
Right, okay. And then the other thing is when...
So the answer, bottom line answer is compare the potential value to the potential cost and see which comes out better.
Right, understand. Okay, thank you so much, Ron.
You're welcome. Thank you.
Really great information.
Good question. Thank you.
All right, we'll wrap up in the Virginia market with Ms. Teresa Johnson. And Teresa, you're live.
Thank you so much, Mr. Hoffman. And I tell you, Mr. Mueller, thank you so much. It was just great information that you passed on to us, and love to have you back in our market again, as you used to be here when you were up in Baltimore. I just love your presentation today, and the question that I have is, I have TRICARE also because of my military benefit. So how does that affect me? This benefit affect me as well? I know you touched on it briefly because you also have TRICARE because you're retired Navy.
Yeah. Well, TRICARE is just another insurance plan. It's just it's one that doesn't cost us as much, and there are fewer co-pays and deductibles. But we still have a whole host of expenses that are not covered under TRICARE. And so if you like this past year, for example, I had LASIK surgery. That was a $2,500 ordeal. So that $2,500 is not covered under TRICARE. But I got the tax deduction for it because it's covered under my health reimbursement arrangement.
Okay, got it.
But Teresa, the bottom line is that that we're never sure how much money health care is going to cost us. So what I love about this guarantee that TASC has made to me, which I've never had to use, is that if they can't document $2,000 worth of health care deductions, then I get my money back. And if you don't have the health care deductions, they can't document it. So you're protected either way. You can't fall off the floor. You know, the worst that can happen is you get your money back. And I wish you'd bring me back to your group, Teresa. It's been a long time.
Absolutely. You mentioned that you were going to provide us with contact info. So I hope you'll still do that.
I missed that. It was breaking up a little bit. Did you get it, John?
Teresa, you asked for what you asked for, a contact on Ron?
Yes, he mentioned he was going to provide. I was just a reminder.
Oh, okay. Yeah, it's if you want to get ready to write this down, it's kind of a long one, but it is tax author, TAX like income taxes, author like writer of a book. So TAXAUTHOR at. Now I'm going to give you my personal email because it's shorter. sbcglobal.net. S as in Sam, B as in boy, C as in Charlie, global, global.net. So it's taxauthor@sbcglobal.net.
Great. Thank you so much.
You're welcome. Nice talking to you, Teresa.
All right, great. Good questions. taxauthor@sbcglobal.net. Sierra Bravo Charlie, sbcglobal.net. Fantastic. Ron, any closing comments? And we're going to wrap it up, sir. Appreciate the very rich content that you brought our way. And any final thoughts?
I guess one final thought would be that if you've got prospects that are interested in coming into Legal Shield and money is their problem, this one tax deduction alone will give them enough additional cash in their pocket to cover all the costs of running their Legal Shield business for their entire first year. And their startup costs are tax deductible, so it lets you get them into a higher plan. And as long as they buy the small business plan, don't let them buy the individual plan. Get them to buy the small business plan, because that makes all the membership fees, dues every single month, fully tax deductible 100%. Those are my final thoughts, John. Thanks so much.
Fantastic. Ron, we appreciate it. I appreciate that. Trish, thanks for getting everything put together. Trish always does an amazing job by getting everything loaded up. And, yeah, guys, enjoy the B2B conference in Tucson this weekend. What an amazing event that will be. Don't forget about the ED conference and everything coming up in Orlando. If you're qualified as an executive director, you're not going to want to miss that. The last time we had that opportunity was 2005 with Robert Kiyosaki, author of Rich Dad, Poor Dad. And also make sure you pull down the super regional event schedule. It'll all be on one flyer sometime this afternoon. As soon as we get it here at Shield Nation, we'll immediately blast it out to all of you who are registered at the email or text alerts at the Shield Nation website. So if you're not in the communication loop, you're crazy. You know, get in that loop, because as soon as we get information, and we're some of the first to get it, we immediately deliver it to this great organization. So be blessed in your travels. Thanks for everybody. And Ron Mueller, appreciate all you've done. Thank you, sir.
Thank you, John. You're welcome.
Bye-bye, everybody.